Hello there! Part 3 of Lecture Series 20 looks at separating components, reassessing the lease liability, presentation and disclosure in financial statements of the lessee as set out in IFRS 16. It is possible for a contract to contain a lease component and a non-lease component. In these circumstances, the contract consideration shall be allocated to each component based on the standalone selling price of each component. If observable prices are not readily available, estimates shall be made maximizing the use of observable information. However, IFRS 16 permits the lessee to elect by class of right-of-use assets to account for the lease and non-lease component as a single lease. This shall result in an increase in lease liability recognized at inception of the lease. In the event of change to lease payments, for example, an increase in lease payments on the basis of an increase in the consumer price index, the lease liability shall be remeasured to reflect the change. Consequently, the carrying value of the right-of-use asset shall be adjusted to recognize the change. The revision to the carrying value of the right-of-use asset shall affect the depreciation charged over the remaining lease term. Note: IFRS 16 stipulates if the lease term changes or the entity's assessment of a purchase option of the underlying asset changes, the lease liability shall be recalculated using a revised discount rate. The revised discount rate shall be the interest rate implicit in the lease for the remainder of the lease, or if not readily determinable, the incremental borrowing rate at the date of reassessment. A lessee shall present right-of-use assets separately from other assets in the statement of financial position. If the lessee does not present right-of-use assets separately in the statement of financial position, the lessee shall 1. Include right-of-use assets in the same line item as that within which the corresponding underlying assets would be presented if they are owned, and 2. Disclose which line items in the statement of financial position include those right-of-use assets. A lessee shall present lease liabilities separately from other liabilities in the statement of financial position. If the lessee does not present lease liabilities separately, the lessee shall disclose which line items in the statement of financial position include those lease liabilities. IFRS 16 requires the lessee to disclose the following: depreciation charged on right-of-use assets, interest expense on lease liabilities, the expense relating to short-term leases and leases of low-value assets, total cash outflows for leases, addition to right-of-use assets, carrying amount of right-of-use assets, and finally a maturity analysis of lease liabilities. Part 4 of Lecture Series 20 on IFRS 16 will focus on lessor accounting.